no. He explains no.
They break down to the downside, right? So we're starting to see that breakdown maybe occurring with this push to the downside in momentum. So there is that possibility of a crude reversal here. And I think certainly that geopolitically makes a lot of sense, because if there is resolution, there could be that move to the downside. Now, here's the thing. Geopolitical news, especially in a crude oil contract, is going to probably trump everything when it comes to technicals. Even if we had a rising wedge that purported to be bearish, which is kind of what we got here, news can really kind of change that scenario. So, as I like to say, because of my affinity for a particular Disney ride, properly warned you be, says I. Right? All right. Hey, speaking of that, properly warned, you've got a survey, a feedback survey out there in the chat. Let us know what you think. Let us know how we're doing. Let us know how we can make this session better for you. Fill out that feedback survey. Connie's going to pin that to the top of the chat there so you can get it. Cute. Now, we were looking at the NASDAQ.
Where he explains that
earlier.
It's going to go down.
This is what I started to see happening this morning.
Think about it.
Again, off of this longer term chart, reversing below that lower reversal zone. So getting below that RSI level, then popping back up, looking at this moving back in an upward direction. And in the short term, that's exactly what was happening. But let's go through the specifications of this really quick. Tick size is 0.25. So this is our significant digit right here. This is going to move in 0.25 increments. When that ticks, that's going to be 50 cents. When this point right here, 23512, when that last digit just to the left of the decimal changes, that's $2. The large contract is 10 times that. So we look at that $2 times this number gives us our notional value of this contract, or our exposure. We go to the sub tab and we look at /MNQ. And because of volatility, because of where the VIX is, and because of overall volatility, the exchanges have increased the initial margin in this and many other contracts. We've seen margin expansion, or initial margin expansion, simply because of higher volatility. So it's not personal. They don't know you. They're not doing it.
Stocks can go down. That's why put in comments
so much as they are
what you're doing, okay?
Protect
and you can make money. Subscribe, give like. We have a lot of courses, free courses.
Markets.
Take a look here.
So that's the reason for a higher initial margin into a trade. If you remember back, for those of you that have been with us for a little while, you remember back to when we were trading silver contracts, and those silver contracts were moving pretty substantially. We saw a big increase in initial margin from about $1,500 to, at one point it got up to the $10,000 or $12,000 initial margin range. So that can and does happen.
So market can go down.
So let's go over here to the left hand side.
Put in comments.
And lo and behold, I saw that message just come through. We just hit our price target on this particular trade. So we saw, so here's where this order was. And so those orders are off. Our other one canceled. So the entry was on this little bit of a pullback. So I saw this rally up, a little bit of a pullback. It broke out of this sideways kind of rectangular range. I had a stop right here, a little bit below, and I had a target that was simply a duplication of this sideways channel range. So I was just looking for a channel breakout and looking for this to move to a symmetrical distance. So that's what it's doing so far. Could it continue to go?